Good afternoon and welcome to our GASB statement number 96, Subscription-Based Information Technology Arrangements, hosted by PKF O'Connor Davies. All attendees are in listen mode only. Before we get started, I'd like to go over a few housekeeping items so you know how to participate in today's call. We've taken a screenshot of the attendee interface and you should see something that looks like this on your computer desktop in the upper right-hand corner. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the webcast. We have a lot of material to cover, and if time permits, we will make an effort to respond. If we cannot get to your questions, a response will be sent post-event. This webinar is offering 1 CPE credit in accounting, and you will need to respond to 3 polling questions to receive credit. If you're having difficulty responding to a question, it's recommended you come out of full screen mode to respond. CPE certificates will be issued within 8 to 10 days via email. A copy of today's PowerPoint slides, a reference handout, and a recording of today's webinar will be made available to you via email a few hours after the event. At the end of the webinar, we do have a very short survey which will be prompt, and your response is greatly appreciated. At this time, I'd like to introduce Katherine, partner of our public sector practice. Katherine?
Hello, we'll take off with today's webinar. I'm Katherine Patnaude, partner in the Wethersfield office. And with me is Joe Centofanti, also a partner in the Wethersfield office. So we'll start things off today with our first CPE polling question, which is, would you like to receive CPE credit for today's session? All right, since the polling started, let's get right into an overview of subscription-based information technology arrangements, or SBITAs. So we'll start talking about what this GASB statement does on the next slide. This statement provides guidance on the accounting and financial reporting for subscription-based information technology arrangements, which is kind of a mouthful, so we commonly refer to them as SBITAs. It defines a SBITA. It establishes that a SBITA results in a right to use subscription asset, an intangible asset, and a corresponding subscription liability. It also provides criteria for capitalization of outlays other than subscription payments, including implementation costs, and it details note disclosures. This statement is very similar to GASB 87 on leases. So when do we need to implement SBITA? The requirements are effective for fiscal years beginning after June 15th, 2022. So fiscal year ends June 30th, 2023 and later. So for your June 30th year ends, you'll be implementing right now. So a SBITA is a contract that conveys control of the right to use another party's information technology software, the SBITA vendor, alone or in combination with tangible capital assets, the underlying IT asset, specified in the contract for a period of time in an exchange or exchange-like transaction, meaning for a fee. This is very similar to the lease definition. But note that the contract could be called a lease, but it may actually be for an IT subscription. So you'll have to look at what's actually in the contract and not just the words. So what conveys control of the underlying IT asset? The contract must have both of the following: the right to obtain the present service capacity or the use of the asset, and the right to determine the nature and manner of the use of the asset. So essentially, you can use the asset as you need it. What is IT software? Unfortunately, that's not defined in the standard, so you'll have to use professional judgment. And if you were to cancel your subscription, do you lose access to the software? If yes, then the contract is a SBITA. If no, then the contract is not a SBITA. So it's for temporary use rather than ownership. What is my subscription term? So the subscription term is the period where a government has a non-cancelable right to use the underlying IT assets plus the following periods: the option to extend if reasonably certain, or the option to terminate if reasonably certain it will not be terminated. Note that the extension or termination can be exercised by either government or the vendor. The option to terminate does have to be unconditional in order to be considered. So items that are not considered a termination option are the payment of all sums due, default on subscription payments, or violation of terms and conditions. So you can't count those when you're looking at your determination. Some exclusions are if you do not need permission from the vendor and the government to exercise termination options. We're looking at the next slide. So you'll exclude those from the subscription term. So if both can terminate without permission, or if both the government and the vendor have to agree to extend. Some exclusion examples include a rolling month-to-month SBITA or a SBITA in a holdover period, if both the government and the vendor could cancel at any time. Or similar for an auto renewal, if both the government and the vendor could opt not to renew. So in addition to the non-cancelable period, you'll need to assess the extension and termination periods. So some factors to consider include any significant economic incentives for the optional period, such as favorable rates compared with current market rates, any potential change in technological development that significantly affects the technology, so if your technology may become obsolete, any potential significant change in the need for the software, any significant economic disincentives, such as cost to terminate the SBITA and sign a new SBITA, like negotiation cost, cost for search for a new vendor, any implementation costs. So, if you're implementing a new financial software, there's a lot of implementation that goes into that, and any large cancellation penalties. You'll also want to look at any history of exercising options to extend or terminate, and the extent to which the underlying IT assets in the SBITA are essential to the provision of government services. And something to note is most likely the further out you are from the initial period, the probability of the extension decreases, especially when you're looking at auto renewals. For a reassessment of the subscription term, if one or more of the following occur, you should reassess the subscription term. If you've elected to exercise an option, even though you previously determined you would not exercise it, or if you elected to not exercise an option, even though you did previously determine to exercise it, or an event specified in the contract takes place that requires an extension or termination. So if your original assessment is no longer accurate, that's when you'd reassess the term, and we'd recommend that you check for this annually. GASB 96 does not apply to any contract that falls under GASB 87 for leases where the software component is insignificant. So an example of this might be copiers with a software component or smart boards. Governments that provide the right to use their IT software and associated capital asset to other entities through SBITAs, so essentially where the government is the lessor, this does not fall under GASB 96. Public-private and public-public partnerships and availability payment arrangements fall under GASB 94. Any licensing arrangements that provide a perpetual license to governments to use the vendor's software does not apply to 96. Any contracts that only provide IT support services, and then short-term contracts, which are 12 months or less. Although with these, you do need to look at the max possible term, so including any extension periods, regardless of whether you plan to exercise them or not. And you'll also want to be aware of any notice periods for cancellations. And I'll turn it over to Joe for some examples.
All right, great. So we're going to talk about some examples of common ones for all entities, and then some different ones for, say, municipality, town side, board side. So the key is these are just examples. You're going to have to look at the contract terms to see if it meets the criteria or not. So we could go to the next slide. So again, these are things that may fall in. So these are the items that you should be evaluating. So one of the easier ways, I think we'll mention a few times, is to start with IT. So what is running on the servers? That's going to also give you a map to some of this as far as evaluation. So Microsoft Office, looking at that that agreement to see if that meets the criteria. The financial or ERP software, software as a service should be evaluated. Capital asset software, if that's different, if it's not part of your ERP system, you're using a different software. Same with human resources, if that's not connected to your ERP. Payroll, outsourced payroll software or as a service would be another area, ADP or Paychex or any of those outsourced ones that should be evaluated. The time clock software is common. Most of the time I've seen 3-year agreements for that, so it's something that, again, to where you are in agreement to evaluate it. Adobe Document Cloud or any cloud storage agreements, cloud computing arrangements, which online applications, online conferencing tools like the one we're on now, or Zoom, or any of the other ones, Teams, we use quite a bit. Online payment tools, such as for credit card payments, those agreements should be reviewed. Debt lease software, so there's a couple of them out there that if you're using that, depending on the agreement, may fall under this. Point of sale software, as a general category, we'll look at a couple more specific ones that I think everyone's familiar with on the next slide. Your phone, voice over IP, what that agreement has. Next slide. So some of the other common ones, so the police body camera software component, we'll talk about it a couple times because there's some complicated issues with that software component. And then the point of sale, tax and assessment software, town clerks software, parks and rec, building department, and different types of parking management software, all kind of like a point of sale. Things will need to be evaluated to see if they meet the criteria for 96. All right. So some specific ones that are education related. Blackboard, which is a teaching platform. I've used that software when I was doing some teaching a grad course, so more at the college level. I've seen that. Canvas is a learning management system. Power School, I think all the education side, everyone is using that. And again, more point of sale, cafeteria, point of sale system, student activities such as My School Bucks, that type of thing, and any digital learning software. And the other one I think that's common on the education side that's not on the slide is Frontline, or ASOP as it used to be called, for substitute scheduling. So it's basically 3 general categories. So we'll say of these types of things. So there's software as a service, platform, and infrastructure. So the software as a service, I think, is the most one everyone's familiar with, the ability to use the software through a cloud infrastructure. And again, also known as web-based software on demand or hosted systems. So hosted in the cloud versus hosted locally in town hall. Some examples, again, Munis or any other financial accounting software, DocuSign, Google applications, Slack, which I guess I had to look that one up, was a project management software. And then Class Dojo, I guess, is used by on the education side to connect teachers and parents and students. And WebEx is another service similar to this Go-To meeting that we're utilizing now. So the next one is the platform as a service. So you use the vendor's applications that run on the vendor's cloud infrastructure. And again, an example of that might be Microsoft 365. Most of the applications that are the platform as a service are open source applications, which I'm not sure we see too much in the government side, in Connecticut anyway. And then the last one is the infrastructure as a service. Customer can remotely access the network server and other computing tools to store data. So virtual servers, again, the example is the police body cam cameras. The videos are stored stored up in the cloud. and any other data storage tool would be under this infrastructure as a service also. Okay, following question 2. All right, quite a diverse group of answers there. All right, the next section is measurement of the SBITAs. So now we get into a little bit more the nuts and bolts versus what the statement says. You know, how do we measure the liability and assets? So basically, this standard has the same concept as leases, where basically these subscription agreements, if they meet the criteria, are basically considered debt. So a lot of the accounting is going to be very similar both to leases and to debt accounting. So we measure when the IT asset is placed in service. And again, we're measuring it just like leases at the present value of the subscription payments expected to be made during the remaining term. Again, this is discounted using the interest rate charged by the vendor. Hopefully, the vendors, knowing these standards are in place, will start being a little bit more proactive in including this information in the agreements. So if you have the interest rate in the agreement, then you would use that interest rate. So if you don't have the interest rate, is not in the agreement, there's a couple different ways to kind of get to what interest rate you could be using. So if you're allowed to use to estimate your incremental borrowing rate, which is what you would have to pay to finance a similar asset and value. So if you have other equipment financing notes or other leases that might be similar, you could use that interest rate. If you don't have one of those type of agreements and you have a recent bond issue, you could use that interest rate. And the third option is to use your judgment, which could be by looking at other benchmarks, what's going on just from the banking, similar governments, that type of thing, to get some perspective on what interest rate makes sense to use. So the calculation. So again, this calculation, as defined in GASB, I think has all the possible things that could affect your total subscription payment. I don't think all leases are going to have all of these components, but if they do have them, they're here. So the fixed payments, which is the easiest one, just X amount per year or incrementally X amount per year based upon the contract. Variable payments depending on an index or rate, like the CPI index. So the payments can go up based upon CPI or some other interest rate. Variable payments that are fixed in substance, and we'll talk about what specifically that means. Any payments for penalties for terminating if you expect the agreement to be terminated. Any incentive receivables, and we'll talk about incentive receivables, any vendor discounts or that are offered as part of entering into the contract, and then the catch-all, any other payments. So most likely you would only have one of the first three, but certainly there could be agreements that have a little bit more complexity to that. So this basically, this calculation in theory, if it is this complex, would have to be done for each year. All right, we can look at an example, and hopefully this will make a little bit more sense. This is kind of an example of a fixed payment lease. You know, this may look a little bit familiar depending on what you did for leases. So this is an example of the tool that PKF has developed to help with the calculation. So looking at the maturity date is in 2026, June 30. Did our annual payments. The incremental annual interest rate is 3.5%. And so the tool here calculates the present value of the payments, the interest and principal. Again, as I said at the beginning, the concept is this is, you know, functions like debt. So we have principal and interest, and this would be the payment schedule. So on $198,000 in annual payments, you'll be booking a liability at the present value of the $181,659. Right. So subscription asset measurement. So here we're starting with what the subscription liability calculation is. So the calculation we just did for the liability is the starting point. And then if there are any payments that were made to the vendor before the start of the subscription term, they would be added. Any capitalizable implementation costs. And again, when you're implementing a new financial accounting software, those costs can be significant. We'll talk a little bit later, a little bit more details as far as what those are. And then any incentives that were received before the start would be what the total subscription asset. Then looking again for example, in that case, you see the liability is the $181,659 that we just calculated. In this case, there were no additional payments before the start, but we did have capitalization of interest cost of $1,000. There was no incentive received, so the asset is going to be $182,659.52. So again, this, because it's amortization, depreciation, this is a straight line amortization, just like all the other capital assets over the term of the subscription. So again, just like in leases, the assets are a different number than the liability and move at a different pace based upon amortization versus the present value calculation. So for the subscription asset measurement, in your capital asset records, we're recommending that you set up a separate category, which we also recommend for leases, is because the information, there's certain information that you're going to need for footnote disclosure purposes. So if it's tracked separately within your capital asset module, that will make it a lot easier to generate the information needed for disclosures, and disclosures will be talked about in a future slide. So the asset amortization, the shorter of the estimated life of the underlying asset per your capitalization policy or a subscription term. I'm guessing that most governments right now probably do not have a capitalization policy related to these types of things. So if you were going to update the policy to deal with this, most likely you would want to match your policy to the estimated the subscription term. So similar to leases, that would be the most logical way to do this, unless there was a good reason to have a longer amortization period.
All right, now we'll take a look at the accounting for SBITAs and the related disclosures. So the first thing we'll look at is accounting at the fund level on the modified accrual basis. The entry for new SBITAs, you would want to post an entry to record the subscription issuance in the appropriate fund, which would be the fund where the payments are made on the subscription. And you'd record an expenditure and an other financing source. There would be no effect on fund balance. So you'll debit the capital outlay and credit the issuance of subscription, which is similar to other debt issuances like notes or leases. And in the implementation year, any SBITAs in progress, so that began before 6/30 or before 7/1/22, there wouldn't be an entry for those at this point. The next entry you'll need to make is also on the modified accrual basis in the fund level. The entry for if you've already made a payment on the SBITA in the fund where the payment was made. You'll need to reclassify the payment as principal and interest expenditure. And you'll want to create new accounts for the subscription principal and subscription interest. And we would recommend budgeting for these in debt service the same as we'd recommend for leases. So you'll debit both the subscription principal and the subscription interest expenditure that was calculated as Joe showed you. And then you'll credit the expenditure. The credited expenditure account will be based on where the actual expenditure was originally recorded. If you do end up making this entry when the subscription is paid, you'll debit the subscription principal and interest and credit the cash. On the government-wide accounting, on the full accrual basis, you'll record a subscription liability, which will be recorded with other debt, the current and long-term portion. And the subscription asset will be recorded as a separate line with capital assets as you did with leases. And the disclosures as well will be similar to leases. You'll include a general description of the SBITAs, which would include the terms of any variable payments that are not included in the liability measurement, the total amount of subscription assets and related accumulated amortization, which will be included as a separate line in the capital asset disclosure, and the amount of expenses recognized in the fiscal year for payments not included in the measurement, including variable payments and termination penalties. You'll also need to disclose any principal and interest payments to maturity, at least for the first 5 years, and then in 5-year increments thereafter. You'll also need to disclose any commitments under SBITAs before the start of the term, and any components of any loss associated with an impairment.
All right, unique or other items, because GASB can't write a statement that doesn't have some twists and turns. So we'll talk about some things that make things just a little bit more complicated than the examples we just went through. First one being variable payments. So that the payments are dependent on an index, which is the CPI, or an interest rate or that type of thing. So you would measure then the SBITA based upon what the rate is at implementation, and then if it's then you would index it up from there in the future. So with variable payments, again, there's 2 different types. There's the one based upon the index, and then the fixed and substance. So a variable payment is not dependent on an index rate. You would not include that in the measurement of liability. So if it's just based upon the number of user seats or usage of the underlying asset only, then you will not consider those as part of the liability. But if the variable payment is fixed in substance, you should include that in the minimum payment. So the example would be the greater of $50 per user or $500 a month. You would use the $500 a month as the fixed and substance payment to calculate the liability. Accounting for implementation costs. So these are the costs necessary to prepare the system for accessing the subscribed IT assets. The examples are, the most common examples related to setting up is the configuration, the coding, if there's any data conversion that needs to be done, the data migration, testing, and installation costs would also fall under the implementation costs. All right, so there's three different ways for looking at implementation costs. 3 different based upon the stages. So preliminary project stage would be expensed. The initial implementation stage, as we were just talking about, it would be capitalized. And then in general, the operation and additional implementation stage would be normally expensed, except for exceptions. So the preliminary stage would be like software selection, that type of thing. All those would be expensed. The initial implementation stage, again, the configuration, coding, testing, getting everything set, those costs would be capitalized. And when we looked at previously, we looked at the calculation that they would be added to the asset. And then the last item, the operations, so generally they're normally expensed. Of course, there had to be an exception in there, so specific criteria is met, such as if in that stage there's increase in the functionality or the efficiency of the asset, such as maybe building a bridge from your tax software to your general ledger, create some efficiency, then you would capitalize that cost. But all the other after implementation costs, maintenance, troubleshooting, ongoing access, all those costs would be expensed. So the initial implementation, the end of the stage is the commencement date, when the subscription asset is placed in service. Again, if there's more than one module implemented at different times and placed in service, when the initial first module is independently functioning. So it's very common to, in a new financial software, to implement the general ledger and the AP application, and then the payroll application may follow at a later date. So once the AP and general ledger is up and running, then there would be a calculation for what those implementation costs are. So if there are additional modules that are considered will be considered subsequent implementation outlays. So you would be able to have implementation costs for the different modules, whether it be the payroll, revenue, billing, capital assets, whatever may get implemented at a later time. There would be additional implementation costs that can be included and capitalized for those items. Vendor incentives. So if there are any vendor incentives that are offered as part of entering into the subscription agreement, that would, any payments or made to or on behalf to the entity that would offset the liability. We saw that in the calculation, or if there's other concessions granted. So some of the examples of the incentives would be rebates or discounts, reimbursement of end user costs, a reduction in interest or principal charges, or just a reduction in the annual fee for year one, that type of thing. I don't know that we'll see this very often, but if we do see them, they would reduce the liability calculation. All right, and the most fun that you can have with GASB 96 is contracts of multiple components. So the contract has both subscription component with the right to use and a component that is not applicable to 96, is not covered by 96 requirements. Then the best case scenario is you would account for those as separate contracts if possible. So you'd allocate the price to individual components to the subscription component and the other component. If it's not feasible, then you would treat the entire contract as a SBITA contract, or again, if the other component was larger than that, the more significant portion you would go in that direction. And a good example of this is the police body cam file storage. Those contracts kind of wrap all that in: the hardware, the software, the storage, and what we've seen today, it seems that there's not enough information to pull that apart. So depending on what the largest component is, that's how you would record that transaction. The other one is that's similar is servers, firewall software. There's a hardware device that that is part of your security system, but then the software that's running on that also is kind of part of the cost. So looking at that, does the hardware or the software will dictate how that should be recorded.
Okay. So it looks like 28% of you have started your inventory and 72% have not. So I think you all can use our next section, staying organized during the SBITA assessment. So things you'll want to do moving forward, whether or not you've already begun, you'll want to gather all contracts that might fall under GASB 96. So I'd suggest taking a look in your general ledger, make a list of anything that looks like it could be software related. You'll also want to start with your IT department. I know a lot of IT departments have a good list of all the software that the entity uses, and also inquire of other department heads, especially in schools. I know there's a lot of different softwares that might be used. Once you have this list, you'll want to perform a review of the contracts, looking for long-term versus short-term. You may need to look at invoices as well. And also contact your auditors for any questions, discussion, and coordination. And you can also complete PKFOD's SBITA inventory schedule, which is attached as a handout and will be sent after this program. You can use this to evaluate and calculate the liability and the amortization. And this is very much like last year's lease schedule that we provided. You'll want to send the completed form and the contracts to your audit team, and keep a list and document everything you considered, all the contracts you reviewed. Your auditor may request this information, so you'll want to include that with the schedule. Your auditor will want to know if it looks like software in the general ledger, why it wasn't included in your inventory. So you'll want to know if it was short-term or if it's actually a service contract or something like that. Some key items to consider when you're taking a look at these. What is the contract for? Is it software? Is it use of a platform or a server? Is it actually hardware or some other tangible capital asset? Is it support services or maintenance, or is it a combination? You'll have to look at the contracts. You may need to contact the vendor for more information. Contracts with multiple components, you'll need to try to get a separate price or at least estimates if it's not in the contract. So like Joe mentioned, the police body cameras, that's the tangible equipment, but also the file storage. So the contract may or may not have those prices split out. Some other items to consider is short-term versus long-term. Is the subscription term only 1 year? Could either or both you or the vendor cancel after a year is up, even if it's unlikely that you would? Is the contract in an auto renewal that either party could opt not to renew? And the key point here is that both the government and the vendor need the ability to cancel or not renew. Even if these are short-term, this should still be documented in a list. For payments, is any portion variable based on usage? And is there at least a component of it that is fixed? So document those as well. So that about wraps us up. So we will take any questions that you might have. Let's see, there's one question. Can we receive a PDF of the slides from the presentation? Yes, those will be sent out afterwards.
Thank you to our speakers, and thank you everyone for attending. Please remember to complete the short survey prompt at the close of this webinar. A copy of today's PowerPoint slides, the reference handout, and a recording of today's webinar will be made available to attendees via email within the next few hours. Thank you again, and have a great rest of your day.
You see another question came in.
Sure.
We have a licensing agreement for computer software that automatically renews until canceled. Is that considered a perpetual license? So no, that would not be a perpetual license because it's the auto renewal. So you'll have to take a look at that and see whether or not the vendor or the government, if they both have the opportunity to cancel that, to determine whether or not it is a short-term or a long-term SBITA, but it's definitely not a perpetual license. Seeing any other questions? Oh, one more. It says, let's see. We have a software that we renew. Oops, let's see. There's two coming in. What is the SBITA term if the contract is 6 years and payments start immediately, but it takes 2 years to implement? So the contract term, or the term would be on implementation. So if you start after the end of the second year, so at the beginning of the third year, your term would be 4 years. Let's see. We have another question. We have software that we renew every 7/1. It is software that is year to year by our discretion. Is that a SBITA? That's something you would need to look at. I would recommend you take a look and see if the vendor can also cancel it or would also be able to opt not to renew it. And if that's the case, it would be considered a short-term SBITA. So it's a SBITA, but it sounds like it's most likely short-term. I think that's all the questions that I see. And one more. If short-term, it still needs to be inventoried and reported, correct? If short-term, I would definitely include it in a list to provide to your auditor. But if it's short-term, it would not be included in the liability in the financial statements. Can you clarify what is a school responsibility and what it is a town responsibility? I would say that's something you'd want to talk about together between the school and the town. But generally, I would think the school would inventory what they have since they know more about it than the town does. And the town would inventory what they have. Another question, if you have a 10-year agreement that was implemented 5 years ago, do you have to research all implementation costs? And is there a practical way to do so? I don't believe so. I know GASB typically looks at things that are practicable to implement. So I would have to look at this further, but I would think you wouldn't have to go back too far to find all implementation costs if it might be difficult to find that information. Definitely going forward, whatever you have for the next 5 years, you would need to include. see, another question. If all of your contracts are year to year requiring a renewal PO that doesn't have any terms for multi-year service nor an interest rate, is that a SBITA that needs to be reported? Sounds like that would be a short term. Again, I'd have to see the actual contract. I would say I definitely look at the contract in detail, but it sounds like most likely that's short term. If the bus company owns the software for routing, do we include? I would imagine if the bus company owns the software, you would not, but I can definitely take a closer look at that. All right, if there are no other questions, Joe and my contact information is on the slide, so feel free to reach out to either one of us if you have further questions, and we can certainly help.
Thank you to our speakers, and thank you everyone for attending. Please remember to complete the short survey prompt at the close of this webinar. A copy of today's PowerPoint slides, the reference handout, and a recording of today's webinar will be made available to attendees by email within the next few hours. Thank you again, and have a great rest of your day.
Thank you.
Thank you.